How much money do you need to buy a home in Omaha, Nebraska? Do you need 20% down to buy a home? Well, that's the subject of today's video, and we're going to get started right now. Hi, my name is David Matney with Nebraska Realty. I'm a local realtor here in Omaha, Nebraska. Now let's jump into today's topic. When you buy a home, the lender's going to look at things like your credit, your assets, and your income. The better your credit, the more options you have. Your down payment depends on your loan program. Let's do a quick review of the 4 different loan programs. Let's start with some no down payment programs. If you're from a rural area, you can do a USDA loan with 0 down payment. Now, since I'm from Omaha, Nebraska, and work mostly in Douglas and Sarpy County, in 20 years of selling real estate, I have never had a buyer who has done a USDA loan. Now, as you move away from the Omaha metro, that is a possibility, but if you're buying in Omaha, a USDA loan is not really an option. If you're a veteran, you can apply for a VA loan. A VA loan or Veterans Administration loan is a loan guaranteed by the VA. The VA loan protects the lender in case of a default. If you don't pay your payment, the lender is going to be protected and made whole. The nice thing about VA loans, A, there's no down payment, and B, there's no monthly mortgage insurance. What is mortgage insurance? Now, mortgage insurance is like any other insurance. You pay a premium to protect the lender in case you default. VA loans have a provision called the VA escape clause. This is to protect the buyer. This says that the borrower does not have to complete the purchase unless the home appraises for purchase price or higher. VA loans also require that the home be safe, sound, and secure. This means the home has any kind of safety issue, for example, like tripping hazards or missing handrails or chipped or peeling paint. These items would have to be repaired before closing. VA loans have no monthly mortgage insurance. However, if you come in with less than 5% down, and this is your first time using the VA benefit, there is a 2.15% funding fee. This is added into your loan amount. The next type of loan is called an FHA loan. FHA stands for Federal Housing Administration. The FHA loan is designed for those who may have less than perfect credit. The FHA loan requires a minimum of 3.5% down payment. What does this look like? Okay, a purchase price of, let's say, $300,000, a down payment of 3.5%, which is $10,500. So you're financing $289,500. The nice thing about FHA loans is that buyers with lower credit scores and slightly higher debt-to-income ratios can access funds at competitive rates in order to purchase a property. But for every gimme, there's a gotcha. FHA has a requirement called the FHA Amenatory Clause. This requires the home to appraise for at or above purchase price. This means if you're buying a home for $300,000, the bank is going to hire an independent appraiser to appraise the property to make sure the home is worth $300,000. FHA is very similar to VA in that they require the home to be safe, sound, and secure. This means the appraiser may require certain repairs to be made before closing. For example, chipped or peeling paint, handrails on steps, or a broken window, or that sort of thing. With FHA, another requirement is going to be MIP. This stands for Mortgage Insurance Premium. This is just another word for mortgage insurance. On an FHA loan, it's called MIP. On a conventional loan, it's called PMI or private mortgage insurance. FHA is also going to have a one-time 1.75% upfront mortgage insurance premium. This is added into your loan. For example, if your loan amount is $289,500, an extra 1.75% or $5,066.25 will be added to your loan amount, or $294,566.25. Let's talk about the next type of loan called the conventional loan. A conventional loan is usually a better option for those with a little higher credit score. The conventional loan has a minimum down payment of 3%. However, with any conventional loan with less than 20% down payment, you'll have to pay monthly mortgage insurance. This is called PMI or private mortgage insurance. The amount of PMI is based on your credit score and the amount of down payment. Your trusted loan advisor will assist you with what loan program works best for your situation. If you need help finding a great lender in the Omaha area, I can set you up with a great lender. My contact information is in the description below. The great thing about a conventional loan is that eventually you can build up enough equity to remove PMI. Now, I did a video on this topic, and I'll leave a link to the card above. What are some other costs with buying a home? Let's take a moment and talk about the cost of the home inspection. Depending on the size of the home, a whole house inspection will typically run somewhere between $500 to $600. This money is paid at the time of the inspection. Now, according to our contract, you have a 14-day window to conduct any and all inspections. Douglas and Sarpy counties have elevated levels of radon in the soil. What is radon? Radon is an invisible, naturally occurring, colorless, odorless, radioactive gas that is released from the soil. Over time, breathing in high levels of radon gas can cause lung cancer. You can conduct a test for radon. This radon test will set you back about $200. If high levels of radon are detected, you can install a radon mitigation system. The cost of a radon mitigation system can vary. Typically, a radon mitigation system will run you somewhere around $2,000, and sometimes you can negotiate and have the seller pay for the cost of the installation of the radon mitigation system. Another important inspection is a sewer scope inspection of the main sewer line. To me, this is the best $200 you'll ever spend when buying a home. Older parts of Omaha, the main sewer line is made of clay, and tree roots can block the main line. If you need to replace that main sewer line, this is not covered by insurance, and replacing a main sewer line is very expensive. A sewer scope inspection is not part of a whole house inspection. I'm a big fan of sewer scope inspections. All of the inspections are paid at the time of the inspection. Most inspection companies take credit cards, and most buyers simply put it on their credit card. Unfortunately, at the time of this recording, in the market we're currently in, especially the entry-level market of $300,000 and below, many buyers are in bidding wars, which might mean they have to waive the home inspection in order to get their offer accepted. Understand the amount of risk that is involved if you choose to waive the home inspection. The next item to secure is your homeowner's insurance policy. Don't take this lightly. You're shopping for the best policy at the best rate. Pay attention to the age of the roof. An older roof may not be fully covered by your insurance policy, and you may have to pay more out of pocket if later on down the line there's damage to the roof due to hail. Once you have your new home under contract, contact your insurance provider immediately. If you need a local provider, the folks at NR Insurance are available for a quote. I'll leave a link in the description below. You will have to pay a year's worth of homeowner's insurance at closing. You'll also need to establish an escrow account for your next year's insurance. Again, your credit score is going to affect your insurance premium. The higher your credit score, the lower your insurance premium. I would plan for at least $2,100 for an insurance policy on a $300,000 home. Again, it's going to vary. You will also need to establish an escrow account for your property taxes. Now understand this, property taxes in Nebraska are high. Taxes are paid in 6-month increments with 2 months in reserve. You'll need to pay 8 months of taxes at the time of closing. Make sure you ask about the property taxes when you purchase your home, and make sure the home is within your budget. If you'd like to learn more about how to protest your taxes in Douglas County, I'll leave a link in the card above. Be aware that the mill levy varies among different subdivisions. Some homes in newer subdivisions have some pretty steep mill levies. Again, just make sure you account for it in your budget. The next expense or cost is going to be the cost of title insurance. Nebraska is a title insurance state. The cost of a title insurance policy is typically split between the buyer and seller. The higher the purchase price, the higher the cost. For a $300,000 purchase price, typically you'll see title insurance around the $650 market. And again, that's just a ballpark figure. The next expense is going to be an escrow closing fee. This is usually split between the buyer and seller. Plan on around $300 for the buyer's half. Another cost is going to be a termite inspection. The lender is not going to lend you money unless the home is free and clear of wood-destroying insects. This will usually cost you about $95. However, if you're using VA financing, the seller pays for the cost of a termite inspection. What happens if they find termites? Typically, in our contract, the buyer pays for the termite inspection. And if termites are found, then the seller pays for the cost to treat for termites, and the buyer must accept the property as treated. Another cost is going to be an improvement location survey or a plot plan. This is not required, but it is recommended. This will show you exactly where the lot lines are. This will run you around $200. The lender is going to have additional charges too. You'll have to pay a credit report fee. This is usually around $39. You're also going to have a processing fee, and this is somewhere around $500. Again, it's going to vary from lender to lender. The buyer will have to pay for the appraisal, and this is around $600. And the lender will probably have an underwriting fee and that sort of thing, and that's going to be around $550. The lender will typically ask for the appraisal fee once the contract is accepted. Another fee involved in a transaction is the broker flat fee. This fee varies from broker to broker, but you should plan for a couple of $100. In this example, we're going to use $495. One quick word about commissions. Commissions are negotiable. There's no such thing as a standard commission. Brokers cannot get together and set a standard commission. Doing so would be a violation of the Sherman Antitrust Act. What does your monthly payment look like? Okay, let's say a purchase price of $300,000. We're coming in with conventional financing with 3% down at a 7% interest rate for 30 years. The yearly property taxes are $3,840, and your insurance premium is $2,100 for the year. So you have a purchase price of $300,000. You have a down payment of $9,000. The amount financed is $291,000. Your monthly payment, and this is principal and interest, would be $1,936.03. Your homeowner's insurance would be $175. Your property taxes would be $320. So your monthly principal, interest, taxes, and insurance would be $2,431.03. Now remember, we're coming in with less than 20% down, so there is going to be private mortgage insurance, and we're just going to calculate that just ballpark-wise $240 a month. So your monthly payment would be $2,671.03. How much do you need to bring to closing? Okay, you have a down payment of $9,000. You had $500 for a home inspection. You did a radon inspection for $200. You did a sewer scope inspection, $200. Those are paid at the time of the inspection. Your homeowner's insurance would be $2,100. Your property taxes, remember we're paying 8 months of property taxes, would be $2,560. You're paying for the cost of a termite inspection, $95. Your title insurance, $650. Your escrow closing fee, $300. Your plot plan, $200. You will have your appraisal fee, $600. Your processing fee of $500. And your credit report fee of $39. And then the lender's also going to have an underwriting fee, $550. And then your broker flat fee of $495. So your grand total of what you need would be $18,189. Remember, we paid some of those costs up front, so you would actually need to bring a cashier's check for $16,689. One item I didn't mention was earnest deposit. When you write a purchase agreement, you will typically offer a earnest deposit. Just shows that you're serious about making an offer. The amount of the earnest deposit is negotiable. Typically, what you'll see in our market is usually right around 1% of the purchase price. For a $300,000 home, that would be $3,000. This earnest deposit is held by the title company and will get credited to the purchase price at closing. So in our example, if you had a $300,000 earnest deposit, you would only need to bring to closing $13,689. Again, it cannot be a personal check. It has to be a cashier's check. I want to take a quick moment and talk about property taxes. Now, if you're moving to Douglas and Sarpy County, our property taxes are paid in arrears, meaning we pay 22 taxes in 2023. Now, how does that work when you're in the process of buying a home in Douglas or Sarpy County? Now, in the purchase agreement, it's written that taxes are treated as if they are due in the current year and are normally prorated to the date of closing. For example, if you're closing on September 18th, the seller is responsible for the taxes up until September 17th, and then the buyer is responsible from September 18th and onward. Typically, the buyer is responsible for the day of closing. I want to talk about another item too, and you don't see this in our current market, but in the past, this was really quite common, and that is seller paid closing costs. You can ask the seller to pay a certain amount of the buyer's closing costs. The amount of seller paid closing costs is limited by the loan program. For example, FHA is going to cap the amount of seller paid closing costs allowed. So you want to check with your lender for the various limits. Now, in the current environment that we're in, you don't see very many offers that are accepted when the buyer is asking the seller to pay some of the buyer's closing costs. Know this, there's one certainty in real estate, and that is the market is always changing. This market will change and seller paid closing costs will come back into fashion. I've been selling real estate for 20 years, and for 16 years, it was common to have the seller pay for some closing costs. Again, things will change and this market will change as well. I have some good news in that there's programs out there like NIFA, which stands for Nebraska Investment Finance Authority, which offers a 5% in down payment assistance. This would be a loan for 5% of the purchase price at a 1% interest rate for 10 years. Now, you can also, in some situations, you can still ask the seller to pay for some of your closing costs on top of that. So you want to make sure you talk to your lender. And if you'd like to learn more about NIFA, you can check out this video and you make it a great day.